Hello, today I will be presenting a case analysis of Tata Starbucks. So, the case overview, a 50-50 joint venture between Tata Consumer Products and Starbucks Corporation formed in India during 2012, leveraging Tata's knowledge of the market and Starbucks' global status. After initially struggling, Starbucks localized its strategy and achieved profitability. Despite the highly competitive market with dominant competitors such as Cafe Coffee Day, the company became the fastest growing branded coffee chain in India by 2022 with 250 stores across 26 cities. Tata Starbucks now faces key challenges of navigating price sensitivity and expanding its reach among India's large market of young middle income consumers. So here I have a Porter's Five Forces model of India's coffee industry. So first we have rivalry is high. There are many competitive coffee chains in India, such as Cafe Coffee Day, Barista, Third Wave, and then exit barriers are high, with high operating costs, high real estate costs, and intense price competition. It can be difficult for growth and profitability, especially for new entrants in the industry. India's coffee industry growth is fast as we are seeing an increase in coffee consumption. And then bargaining power of suppliers is moderate to low. The global coffee industry does have many suppliers, limiting the power of a single supplier with the increased competition. Suppliers are overall integral to the success of coffee chains, but this doesn't mean their bargaining power is necessarily high, especially with well-capitalized buyers. And then suppliers sell to many industries as well. There's the hotels, restaurants industry, retail with instant coffee, and then exports as well. India exports about 65 to 70% of its coffee production. So export buyers are the main source of revenue for coffee suppliers. And then forward integration is possible with the example of CCD's model of sourcing its coffee locally, as well as Tata Starbucks. Threat of substitutes is high. Local tea companies such as Chai Point and Chios, as well as McDonald's, Cafe, are they all offer tea at reasonable prices. And then also a threat of substitute would be just home consumption, which is a cheaper option for consumers. And then we have bargaining power of buyers, which is also high. Consumers are purchasing in small volumes in the industry, but there are many buyers, so this increases their bargaining power. And then multiple options of international and local brands are available, leading to low switching costs for buyers. Price sensitivity among buyers is also high, which makes it harder for premium brands such as Starbucks to set higher prices when there are cheaper alternatives out there. Lastly, we have threat of new entrants, which is moderate to high. Um, there are high economies of scale with Starbucks and Cafe Coffee Day, which can be a challenging environment for new entrants to match such high scale companies. And then the barrier of high capital requirements with high initial investments is prominent as well, due to high real estate costs and high fixed costs in general. And then product differentiation is a moderate barrier. Um, Coffee is a relatively commoditized product in India, and customers can be won over with low prices and localization, and then limited access to distribution. As I've mentioned, real estate is expensive and limited, making physical presence harder for new entrants. Okay, next we have strategic groups within industries for the coffee industry. Tata Starbucks is the star here we see, and it leads with high brand prestige and strong digital integration with its global reputation and high functionality app. Third Wave is second, making it the closest strategic threat to Tata Starbucks. Third Wave has a premium aesthetic as well as strong mobile integration, and this company could be direct competition if they continue on their upward trajectory. And then next we have Blue Tokai is positioned similarly to Third Wave, being pretty high in brand prestige. And then next we have Cafe Coffee Day, which was mentioned quite a bit in the Tata Starbucks case. But even though it does have a very large footprint giving it leverage, it is pretty outdated compared to the other competitors I've mentioned. So it's been kind of declining in relevance, making it farther down on this chart. And then Barista is the weakest competitor based on this chart. It lacks in digital modernization, as well as innovation compared to Starbucks and these other companies in the coffee industry. Okay, here I have the Porter's value chain. So starting off with direct sourcing, we have the Tata Coffee Partnership, and then beans are harvested at plantations in Starbucks global supply chain and domestic farms in India. And then beans are transported to Starbucks locations. And then we have operations, proprietary roasting, which aligns with Starbucks global standards, menu localization to increase cultural relevance and customer appeal. And then we have product development and beverage preparation. Next, we have outbound logistics. So first and here we have direct to consumer channels such as the Starbucks app and delivery partners. Then retail channels are utilized to sell prepackaged products to consumers. And then last we have e-commerce distribution. And then we have marketing and sales, localized campaigns to adhere to cultural preferences and seasonal differences. Rewards app, this is important for building customer loyalty as well as collecting customer data to drive personalization for each customer. And then we have social media such as Instagram, TikTok, Snapchat, etc. Seasonal offerings to bring customers in with deals and incentives to make a purchase. And then we have co-branding with Tata. This partnership enhances local legitimacy and trust among consumers. And then we have service and in-store environment, customer loyalty programs, inviting atmosphere with the seating, lighting, music. It creates a premium experience for customers. And then strong customer service to help strengthen brand perception. And then we have the third place experience. Based on this analysis, here are some recommendations for Tata Starbucks to continue its expansion and get over some of the hurdles the company faces. So first we have promote lower priced options and continue to promote the 6-ounce Pico size for hot beverages. This has seen a lot of success, so continuing to do that would help out Tata Starbucks. Offer mobile app exclusive deals such as discounts and bundle offers. And then we have target digital advertising towards young middle income consumers and introduce more diverse and authentic Indian chai options. With India being a $30 billion tea market, Starbucks should really capitalize on this more. And then enhance the dedicated tea menu section to be more prominent and well known among consumers. And then also expanding on regional food offerings. And some more improvements here with a focus on expanding in number of store locations. So accelerate expansion in tier 2 and tier 3 cities to significantly increase the number of new store openings that Starbucks has planned. And then partnerships with local businesses to co-locate more stores inside popular supermarkets, department stores, and multiplexes in tier two and tier three cities. And then increase the number of drive-throughs to offer quick service.